Hi guys, a very good evening to you all. Just waiting for everybody to log on now. Can you all hear me?
Yep.
Yeah, great stuff. Nice to see you all this evening. Thank you again for all joining us. A few people on board here, which is always great. Having a look now. Okay, guys, what we thought we'd do, we'd change the format slightly. I've been speaking to Jamie about what we're doing, what our sort of presentation is, and indeed how we are going to move forward with this. A lot of people ask us questions during the week, so we thought the best way for us to possibly do this is for us to turn around and say, well, what we'll do, we'll open it up to a forum. So whoever's online, whoever wants to ask a question, property related, finance related, insurance related, then obviously you've got the opportunity to do so on here, and it will form part of our community. I'm sure a lot of the current topics, a lot of the questions of interest will be of interest to everybody. So, has anyone got a question about the markets, about finance, about anything else at the moment? Seem to have lost Jamie, but he will be with us. I'm sure he'll probably bring his culinary delights on to show us all. Anyone here got any questions they'd like us to open up with this evening and talk about? Ian, you've got your hand up.
Yeah, yeah. It's just a general question about the way the interest rates are rising. At what point does it not become worthwhile to get a new buy-to-let, put it that way?
Very interesting question. I mean, I'm not a finance broker myself. I am obviously property related, so I'm not qualified to give you financial advice on that. One thing
Oh,
that I would say though, and I've studied back because I can remember the early 1990s. I was only a child then, but I can remember the pain that it caused my father back in those days because he was obviously in the property industry himself. He had a lot of stock. And obviously, interest rates hit, I believe, 14% very, very quickly. So, of course, that caused a lot of pain to a lot of people. I've studied that. I've studied the effect of the credit crunch. I've looked at the effect of taking our interest rate to 0.25%, Bank of England base rate. And I've also looked at where we are today. Who knows what the interest rate is today? The Bank of England base rate is today. Jamie, you are forbidden from answering. Who knows what it is today? Quick shout out.
it's 4.5%, isn't it?
4.5%, spot on. Last put up in May. I believe we've got a couple of days before there will be another
Yeah.
announcement. Of course, nobody knows what they are going to do, a lot of speculation going on. But that's where we currently sit. And it's quite funny because I've got schools of thought. I'm 47 years old myself. I've been involved in property since birth, basically. So I've seen a lot of different variations. And when I talk to the school of thought of perhaps people who are younger, no disrespect to them, but people who are younger are saying to me, I can't believe how much the interest rates have gone up. I can't believe how high they are. And is this sustainable? Well, of course it is. Interest rates have got to be at this sort of level, if not slightly more, to provide a stable economy and indeed to provide us with a curb on inflation, which as a nation, well, as a world at the moment, we so desperately need. So a lot of people are being shocked because they've built their business model on artificially low interest rates. And a lot of people are just seeing it recover to normal. Do we ever want to see it go to 14% again? Most certainly not. However, we need a fine balance on it. So to have a look at the semantics of this, Jamie, do you want to jump in on this one or
Um, I don't know where to start, to be honest with you guys. I say that I'm very, very exhausted. Sean, I haven't forgotten about you.
Don't
Uh,
worry, mate.
the other Sean hasn't got back to me. In fact, I don't know if Ben's disappeared. Ben, are you still there?
I'm still
Uh,
here? Yes, yes.
yeah. Okay, so can you reach out to Sean Roper? I have reached out to him. I'll send you a message after this. So Sean Roper, just remember that afterwards, mate, and I'll send you the details. Um, so when I say I don't know
Wait,
where
have
to
you got the
start,
correct surname? Sean Roper.
uh,
Williams.
no, 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 it's Sean. No, not you.
Oh,
The other
okay.
Sean. Sean Paul Foss.
Yeah, yeah, yeah. Sorry, because I was going to say Sean Roper is the main guy at Paul Fosh Auctions, and obviously
Yeah.
Sean here is Sean Williams. So I was going to say I got a bit confused. Sorry, my fault. I'll butt
I'll
out
send
once again.
I'll send you details afterwards. So when I
Okay.
say I don't know where to start, guys, I've never worked so many hours in my life. I've never been so busy at the same time, so I can't really complain. I had a broker on the phone to me yesterday morning, actually crying on the phone to me. Where we're getting at the moment is it's a very, very live market. And I say that, and I probably sound disheartened. I'm just very exhausted. Very, very, very exhausted. I've got a newborn baby, work, my son's prom. Um, so just tired. I'll give you an example. I put a post up last week. I don't know if I mentioned this last week. I can't remember what day it was. Santander had system issues, and then 6 o'clock in the evening, they fixed their issues at 20 to 6 in the evening. Bear in mind, there's pulling rates at 10 o'clock. They then emailed either their branch staff to say, we've extended the deadline until 12 o'clock that same night. So they emailed afterwards. Halifax had given us 2 hours notice today. And it all sounds negative. But what this does, it creates uncertainty and it makes people nervous. When people are nervous, they make bad decisions. And those bad decisions are when people panic. So people will say, I don't want to buy now because interest rates are going up. Well, depending on what your strategy is, if you're buying and refurbing and selling, so you're flipping properties, I don't want to say buy, refurb, refinance because those deals, there's always money generally left in, as I said last week. There's opportunity. Like as I said, I've never been so busy. Like I've got an underwriter of a major lender who is emailing me. She just messaged me, but that's why my phone was going on and off. Regarding deals at this time at night, and that's someone who works for a massive institution who's trying to get deals through. So the interest rate, I think, is slightly irrelevant. It comes down to the deal and the cost. You're never ever going to rent a property. And I say slightly irrelevant because you need to understand your tenant could be the risk. If they stop paying your rent, time to evict them, you need to understand their circumstances, cost of living. But if you get a buy-to-let mortgage now and it's 6%, if it's 6% and it's giving you, I've got one. I'll give you an example. The first deal I've got to do after this, I've got to get one on after this. The mortgage is going up drastically. She's had it on a repayment mortgage. We're flipping it now onto an interest only so she can overpay. If the tenant doesn't pay, she's not committed to a high expenditure. The mortgage, the rental income is £1,000 per month. If she continues on a repayment mortgage that she's currently on, the mortgage payment will be 1,083. So she's actually at cash flow negative if you look at it. But in reality, we're going to switch it on to interest only. She's still going to overpay on it, but she's going to put the rent up now. So the rent's going up by 10%. So when in reality, she's got a property that's self-funding and we're getting capital appreciation. In the last 2 years, her property's gone up, I think, £63,000. So it's irrelevant what she's making monthly because she's not focusing on the monthly income. She's down south a little bit, so it's a bigger value property. So interest rates, while they are scary and they are up and down and they are nervous, it all comes back to the numbers, guys. In my opinion, but we are going to see another increase. We're probably going to see another one in about 2 months, 3 months' time.
It's interesting what you say, Jamie, because of course the general consensus is that when you run a business, when your operating costs for the business increase, naturally the product cost or the service cost has to increase in proportion to that. And that is how life works. That is how inflation works. That is how obviously things have, since the day dot, have all worked. And like I say, I'm not a financial advisor, but a lot of it down to me is common sense. And I spoke to somebody before the last interest rate hike, and they said to me, when do you think is the best time to buy a house? And I said, my mantra for the past 25 years has been, the best time to buy a house is today. Because yes, we are going to have peaks and troughs, but according to statistics, since records began, property prices have risen by a phenomenal amount. They've doubled in value every 10 years. It's not a straight graph, as I've always said. It's a graph that goes up and down. But ultimately, if you look at the long-term view, you are going to get the capital appreciation. This particular person asked me on behalf of their nephew, a youngster who was thinking of a first-time buy. And they informed me they had told their nephew not to buy a house because of interest rates. So we have a little snapshot, and I look at this snapshot, 3-bed terraced house in Newport, which is my area, my turf. I know the values, I know the rental values, and I know how much the properties are actually worth. So if you look at a 3-bedroom terraced house in Newport, let's say for the sake of round figures, £150,000, that property will rent for probably in excess of £900. But let's say £900 per calendar month. And anybody with properties in Newport knows that is a true statement. So you've got the opportunity to rent a property for £900. However, if you wanted to buy that £150,000 terraced house, and like I say, this is not financial advice, it's from illustrations that I've seen. If you take out a 30-year repayment mortgage with just a 5% deposit, so you've got to beg, steal, or borrow £10,000. That gives you your 5% deposit plus your legals, the cost of moving. You can scrape it in there. So if you can beg, steal, or borrow £10,000, the cost of that mortgage is less than £500 per calendar month. So you have a choice of either renting and paying your landlord's mortgage or buying your own house and almost halving your monthly costs. Now, to me, the common sense option is the best time to buy a house is again today. But with people out there like this giving advice of that nature, which is bad advice in my humble opinion, that's bad advice. It just makes for a huge opportunity for landlords. So there's always going to be a massive rental demand. We are in an almost emergency situation in the United Kingdom with housing. The government are making it harder to become landlords. And also our population is growing and the stock is dwindling. We haven't built local authority stock like we did in the 50s and 60s since those days, more than 50 years ago. And we've sold a lot of council stock off under the right to buy scheme, and we haven't replenished that stock. So the nation is dependent upon private landlords. And again, my humble opinion goes upon supply and demand. And when the demand is there and the supply is diminished, obviously the profit margins are going to be higher. So that is what the ethos of the buy-to-let business is built on. So irrelevant, like Jamie said, of the interest rate, have a look at it as a business model. Let's look at what the worst case scenario could possibly be over the next 5 years. Let's take the worst possible rates and then let's measure that against the pros and cons of buying this buy-to-let opportunity. Because one thing's for sure, Jamie mentioned that obviously one of his clients, if they stayed on their own on the existing product, could become cash negative. I don't know of any other investment vehicle that doesn't require a cash input from the person investing in it. Property has to be one of the only, if you do it right, self-financing investments. So to me, it still provides every day a fantastic opportunity.
I'm just going to jump in, sorry. I'm going to change the direction slightly. I just had a message as you see me looking down. My phone isn't stopping. Sorry, guys. I want to do something a little bit different. You all don't have to go on camera for this. And I think this may work. What I'd like to do is go around everyone with the exception of Ben and just introduce yourself. What's your name? Where you're from? And what you do for a living. If I start off with Sean, because Sean is in my top left.
Can you hear me? Can you hear me?
Yep.
Okay, I'm Sean Williams. I'm from Caerphilly. I'm a builder. We renovate properties, making other people wealthy. And now I'm having a go myself. Yeah, so I'm trying to learn how I can develop investment property because I'm 54 and I want to come off the tools.
Okay. I'm going to add to that, and then we're going to come on to you in 2 seconds, Gary. What's your goals for 2023, Sean?
My goals are to complete on 2 properties and develop a strategy for the next 5 years. So it work in progress, as you already know.
Okay. Thank you very much for that, Sean. It's like an
Thank you.
AA meeting now, guys. People are dropping out. Matt's gone. I know Hassan's still there. Over to yourself, Gary.
I'm pretty similar. I'm Gary. I'm 54. I'm a builder. I'm from Cardiff. I got 2 buy-to-lets currently, but I want to expand and grow and get off the tools, get on my day job.
Okay. Off the tools. What's your goal for 2023?
I did want to do HMOs, but they're too expensive, so I want to get some rent to SAs.
Okay. Rent to SAs.
I'm looking around
Dale. Also, sorry, Gary.
I'm looking around the Avon Valley and Blind Rhondda, Ron Zip World, and the bike park and the tunnel and whatever.
Okay. Dale, I'm not too sure if you've seen what we've done.
Yes.
Everyone, you did, so it's over to you next, mate.
Evening, everybody. My name's Dale Morgan. I'm 33 and I'm an alcoholic.
Aren't we all?
I'm new to the sort of property scene, kind of. I've become a landlord through my first property, which I bought wasn't worth what I bought it for when I wanted to move on. So we rented it out for a period of time, sold it now, and we live where we are now. I'm just about to register a limited company to start my property journey properly. And yeah, sort of initially probably look to do flips to raise my capital lump that I've got, and then possibly look to, if I get a good deal, do one and keep one and rent it out, and sort of mix between flips and BRR.
Okay. And what's your goal for this year?
At the moment, I haven't really got one. I'd like to have acquired a property and sort of done a flip, and possibly sold it, and see where I go from there, really.
Okay. We're going to go over to you, Hassan, next, mate. Thank you, Dale. Is Hassan there?
Hello, Jamie. How are you? Okay?
I'm good. You, buddy?
Yes, not too bad. Yeah, sorry, just give me a minute. Yeah, it's me, Navid. I'll just put the camera on. It's me, Navid Hassan. I'm normally from Bijan, but I got office in Cardiff. I'm a business consultant, also property investor. I got investment on multiple strategy. So I got quite few service accommodation. Also, I got commercial buy-to-let and also doing development as well. And obviously this year, last week I just got one quite good B&B properties, and also offer been accepted for a quite large, commercial properties. So I'm really excited for this year. Yeah.
Okay. So you've got a lot going on.
Yeah.
What's the ultimate thing you want to achieve this year, Naveed?
Yeah, obviously, with the commercial one is very looking forward is like kind of generating 6-figure rental income, So far it's been accepted, so I'm just working on that one now. So obviously that other B&B, it was pretty good. It was completed last week. So I got a plan to buy a few more. And obviously once I got those, I try to refinance,
Okay, great. Notebook Money, reach out, the team in the know,
Yeah, no problem. Thank you.
You should speak to us. Thank you.
That's
Thank you,
right.
Naveed.
Thank
Let's
you.
go over to Ian next, I believe.
Hello, my name's Ian Owens. I'm what can I say? Landlord, 3 properties at the moment. Got a full-time job as well. I thought at the beginning of the year I was going to buy another one, but I just don't know anymore. So I might just lay low and just have a stable life. And for the next 6 months, I could either go for another one or pay off, or massively clear an existing one and then refinance maybe this time next year, perhaps. I just don't know yet. Don't know.
What do you do for your full-time job?
IT project manager.
IT. So turn it off and on.
Pretty much. Yeah, why not?
Okay. So what's your goal for this year, buddy?
I don't know anymore. I thought I had one. I just make the right decision, whatever that is, which is just the hardest thing to do, probably.
Finding direction, for the sounds of it. Okay. Thank you very much. Gina G. Oh no, Gina W. Sorry.
Right. I'm completely new to the game. I'm being mentored by Ben at the moment. I currently self-employed dog trainer, so it's slightly out of the property bit, but the intention is my contract runs out in 2.5 years, and I want to be in a position where I can give that up and go into property on a full-time basis. That's about it, really.
Okay. So what's your goal for this year?
Just starting off sourcing originally, just building up a capital really to be able to move on a little bit further.
Okay. Okay. Thank you, Gina. And Reese?
Hello.
Hiya.
Sorry, I've joined a little bit late.
Well, okay. Did you, so everyone sort of introduced themselves. Tell us where they're from, age, what they do for a living, and their goals this year, pretty much, buddy.
Oh, cool. So I am somewhat new to property. I've had a HMO for 5 years, currently being mentored by Ben. So we are halfway through a flip and just about to start another. So goals for this year would be to get those two finished, hopefully start on a third one if we can, and just keep moving forward, really. Personally, I am an assistant project manager for the Coal Authority. So, I've sort of got a little bit of project management background. So I'm not wholly unfamiliar with this type of stuff. But yeah, it's all quite interesting. I'm keen to get moving, really, for getting out of the day job and into property full time at some point.
Okay. Thank you. Now, there's a reason I asked everyone to do that, and that was just off the cuff, but that wasn't planned. I've just had a message this evening from a client who is a plumber, and his message again, go away. Basically, one of his clients had decided to sell their buy-to-let because of interest rates. They've sold them to £84,000. He's going to spend about 20 to 25 on it, and then flip the property for 140, 145. That property is not on the market. It's never seen an agent, but I think it's very key to understand who does what and what their situation is. Like, for instance, in here, Reese just mentions he's had a HMO. Gary, you said you wanted to get into HMO. It might be worth you two having a chat, pros and cons. Reese, you're doing flips. Gary wants to get, there could be a trade-off on knowledge, etc. So I believe when I speak to Ben, and me and Ben don't actually speak very often, considering what we do together, is...
That sounds... Like, hang on a second. That doesn't sound right. What you just said there.
Whoa. That's wishful thinking, Ben. Wishful thinking. I've told you many a times I'm a married man. But I think the purpose of like this evening, and these are going to get, is connect and meet new people. And I think that's why I just wanted to introduce that, really. Does anyone think following that they would reach out to anyone who was in today's Zoom? Awkward balloons.
I thought it was a fantastic exercise, to be fair. I really enjoyed listening to everyone. I've taken notes, if I may be so bold as to reveal what my notes say. A few people on there, Sean, you're talking about your target 2 buy-to-lets. That's fantastic. Everyone's got to have a target. Also, Dale mentioned his target on what he's going to do too. I think it's great to have a target. My mentor is a guy. He's not involved in property. He's an old school friend of mine. Long story. He's involved in new technology. And I actually sold him an investment property in 1999, I believe, when I was working as an estate agent in London that he still owns today. It's quite a long story because for about 10 years, he got no capital appreciation on this particular property. But since then, it's literally got into the stratosphere. So whereas he used to moan at me, every time we spoke about Gunnersbury Court. He used to moan about Gunnersbury Court. He now doesn't talk about Gunnersbury Court, but he's my mentor. He's involved in new technology. He set up an app, a parking app in London. The parking app is now worth close to £100 million, which I struggle to get my head around. The fact that there's no assets, there's nothing, there's no bricks, there's no mortar. I'm property. I don't understand this. It's in the clouds somewhere up there. But his business is worth £100 million. And his mentor, he's got a mentor as well. His mentor is actually one of his angel investors, and that is a guy we all know on here, Sir Richard Branson. So, I mean, to have Richard Branson as your mentor is quite something. And he was telling me that when he spent time out in Necker Island with Richard Branson, he was firing questions at him. And he said, one of the questions was, have you got a 12-month plan? Dan said, yes. Have you got a 2-year plan? Dan said, yes. He said, have you got a 10-year plan? And Dan thought, honesty being the best policy, I'll say, no, I haven't. He was expecting to get a bit of backlash from that, and he didn't. Richard turned around to him and said, well, actually, that's the best thing I've ever heard. He said, most people lie and say they have got a 10-year plan. He said, you shouldn't have a 10-year plan because business, like everything else, can change so much in 10 years. Look at the mobile phone and the laptop you were using 10 years ago. You know, it's almost laughable now. So to hear that from somebody of the kind of echelon of Richard Branson is quite refreshing. And why am I talking about targets? Because so many people in property say, right, I need to acquire 2 or 3 or 5 or 10 properties by the end of this year. I said, that's great. Let's put that target into practice. However, property deals are like buses. We can schedule everything else around, but we can't get a surefire 10, 5, 3, 2 property deals in 12 months. And the worst thing is to satisfy our egos and our emotional target, we get to December and we're one property short. So we buy an absolute lemon just to get to the point where we wanted to be, which is going to be the biggest problem that we've got. So my advice to Dale and to Sean is set the target, push it, but look at the quality of business that comes along in the meantime. I'm going to speak to Gary now about Rent to SA. Gary, fantastic strategy, very low capital upfront required in it. However, few things to bear in mind. Please look very carefully at the compliance and also look generally at the business model, because the one thing that I don't like about rent to rent or rent to SA or however you want to call it is the fact that you've got no onward ownership opportunity. If, for example, you've taken a property on a 3-year management contract or lease or however the deal is actually set up, your landlord could look at you and say, well, what are you doing differently to what I was doing? I'm tired, I'm knackered, I'm fed up, I'm not earning any money from this property. It's a money pit. They look at what you're doing, you're ingenious in what you are actually doing. And you've turned that property from an absolute money pit into a huge profit-making opportunity. They turn around to you at the end of the 3 years and say, well, Gary, thanks for showing me that. I'm not going to renew your lease. I'm going to take it back and do exactly the same myself. So just be mindful of that, because there are other strategies like we spoke about on last week's webinar, where we've got the opportunity for example, lease options, where we do have the ownership opportunity in there.
Yeah, I just need something with a low entry.
Yeah, definitely. It's a great strategy, but I want everyone to go into it with their eyes open. If you want to chat further about this at a later date, we certainly can do.
Yeah, definitely give you a bill.
Yeah, that's perfect. Yeah. Hassan, thank you. Always a pleasure to see you at our live Sunday meetings. My only concern is if you are driving, please concentrate on the road. We don't want a car accident whilst talking about property. Ian, just to answer your question, my mantra is now is the best time to buy a property, but I understand your conundrum, your quandary that you're in at the moment. But just have a look at the deal. Have a look at the deal. Have a look at the financing of that deal. Speak to Jamie and his team. Have a look at the best possible financing option. Then review your offer on a particular property. Because the worst thing a vendor can say is no. So if you set up a deal, you go back, you do your due diligence, you analyse that deal, and you look at it and you say, well, actually, they want £100,000. It doesn't work at 100. It works okay at 90, but at 80,000, it's an absolutely fantastic deal. Go and offer 80,000. If they say no, no harm done. Move on. Go to the next one. Gina, been my absolute pleasure to mentor you with the sourcing business. We're going to move forward with that. It's going to be fantastic. You've got all the attributes. You've got the persistence, the expertise. Gina has got this file, right, of notes now, which is the best that I've ever. Sorry, Reese, I'll come on to you now, and I'm not, I'm not knocking you for not taking notes, but Gina's got the most best file that I've ever seen. So she's got everything there, so analytical and a perfect fit for our property business moving on. Reese, again, my absolute pleasure to mentor you. It's been a fantastic journey. Reese was quite humble and modest. He said he's got one flip. He's actually got his second completion, which was the end of last week, I believe, Reese. So Reese has got 2 deals underway right now. So whether he took notes or not, it doesn't matter. He's walking the walk, and we are obviously not just talking the talk, we are walking the walk, which is absolutely fantastic. So I hope I haven't missed anyone out. But thank you, everybody, for your contribution there. And I'll hand back to Jamie now so we can get on with what he originally planned without me, as everyone tells me, talking too much.
Guys, I can barely speak, as you can tell. I have not got anything planned. I just want to have an informal chat, connect, provide any assistance if I can, answer any questions. Based on it so far, does anyone have any questions or would like information on?
Yeah, I've got a couple of things. 2, actually. One, a client that I do work for is selling a flat and is basically chatting to me today. And what I would like to know is what process would you go through to either discount a property or take it further for it to be a potential investment?
You discounted it for me, to be honest with you. When you said one word, I'm not going to say anyone apart from Ben. Can anyone guess what that
Flat.
one word Sean said? I'm going to see if anyone else can guess. That may be right, that may be wrong. Anyone else guess? Anyone else? No, but it looks a bit flat. As soon as you said flat, unless you've got the freehold, which is obviously what we're discussing on the other thing, I'm not a fan of flat. They're great for family homes.
Yeah.
Investment, you've got restrictions in the lease. You've got ground rent service charges that can eat into it. You can come along with unnecessary maintenance costs or inflated maintenance costs. But ultimately, the tenant's more transactional. They come in, they leave, you get rental void. So flats are not for me. Ben's come back like a magic star into the room. I don't know if anyone thinks this, but I've just got this. Ben's a bit like when Dickinson's deal, they speak to the guy, like, how much can I get for this? And then Dickinson comes along and says he's a little bit. Do you see the way he disappears and comes back? Don't know if anyone else gets that reference, but that's the reference I've got. Sorry. Over to you, Ben.
Dale likes that. Well, I just think you guys have to stare at my ugly mug for long enough. So whilst other people are speaking, I just make myself quite discreet. I've got a great guy working with me, a young guy. He's an ex-professional rugby player, and he's been fantastic on his journey in property with me. And we try and do webinars, and literally, I have to say now, right, I want you to do that webinar on your own. Record the webinar. I want you to do it on your own with potential clients, because that way I can't butt in. I've always got to have my say. I don't know what it is. I've always got to have my say, but I hope, guys, that you don't think I am being too bullshit, and I hope that I am providing some sort of value for you.
It just reminded me of David Dickinson when he comes in. That was all.
But yeah, just reiterating what Jamie was saying. I mean, it's really important, Sean, just to actually look at the whole deal, because I've seen it so many times myself. When we're on the mentorship program, it's actually our second module normally is we look at property types. And the thing that does me in with flats is obviously lease problems. You buy a flat, it's got a 125-year lease on it. You're perhaps 30, 40 years into that. As Jamie will tell you, lots of mortgage lenders have different criteria on how long the lease has to be to refinance. Some of them it's 80, 60, 50, whatever the case is, you're going to get to that ticking time bomb is constantly ticking. And you're going to get to the point when you're going to need to extend that lease. And you find out that the lease was set up 40 years ago by a management company, which is one person who sadly no longer with us, has died. And to get that sorted out with land registry is just a complete, total and utter headache. Jamie also mentioned overinflated maintenance costs, which I've seen this with my own eyes. I've been out to properties and I've looked at properties. And for example, I've looked at the roof. A Victorian house converts into 3 or 4 flats. And I've looked at the roof and I know myself, and obviously you guys, you, Gary, you're in the trade. I know you would get the roof done for 20,000 quid. And you look at the maintenance schedule and it says the roof is £55,000. Now, I know full well the contractor doing that roof is probably going on holiday. So he's probably taking the guy from the management company on holiday with them this year. But it's kind of like your hands are tied. And it's almost like, I talk to a lot of people about this because we've had a lot of conversations with financial advisors with the new pension regulations now, because some people are unhappy with their pensions. Because what happens is you've got a panel who are managing your money. The money belongs to you, but they're managing your money. They're managing your retirement, your future. And they haven't done too well. So they write to you and say, well, I'm really sorry, Sean. I'm really sorry, Gary. Your pension is ill-performing at the moment. So therefore, the estimate was this, is actually gone down to this. And you think, well, what can I do? The simple answer is nothing. You're completely hands tied like you are with the leasehold property. If you release your pension, you put it into property yourself, it's got to be commercial property. It's very complex. Again, I'm not qualified to talk about that. But just like owning a leasehold flat, if you own a freehold property and somebody comes along and says, well, it's going to cost you £55,000 to replace the roof, the beauty of that is you can actually get more than one quote. And you can find a decent tradesperson who comes along and says, well, actually, you don't need a new roof. Or the third person comes along and says, well, if you want a new roof, I'll do it for £20,000. You're faced with all the options, all the choices, and you can make that decision yourself. So that's why I don't like leasehold properties, because they can be problematic, they can be expensive. And I mean, if you get down to the nitty gritty of some of these big blocks of flats in Cardiff, I mean, major fire problems, major cladding issues, unsaleability. Some of them carry a £400 a month service charge because they've got a concierge and a swimming pool. Well, my answer is buy yourself a lazy spa and a Ring doorbell and a freehold property, and you're fine. That's my advice on it. But let's look at the deal, because maybe not for the long term, but if you've got an opportunity to purchase a leasehold flat and everything stacks up and you could maybe flip it, that's an entirely different ballgame. So
I think that was I didn't actually say that. It's probably what I was looking at because it's run down. But I think the process, is it worth looking at? What process do I go through? So I've started looking in the area, what rents, how much is that property? Oh, it's difficult because I haven't got the exact address, but
right, you need all the information. So what you need to do is you need the exact property address.
Yeah.
You need the lease information. So how long is the lease?
Yeah.
Who is the leaseholder and management company?
Yeah.
What is the ground rent charges?
Yeah.
Is there any service charges? What do they cover? And is there any plan in place for routine or indeed unforeseen maintenance?
Okay.
Because again, the worst thing is, Sean, is that you can get into a leasehold flat and they say, well, the ground rent's 20 quid per year and the maintenance charge is like £50 per calendar month. And you think, great. But there's no facility in place for maintenance. So we get to the point when it needs a new roof in 3 years' time, and they say, right, there's 10 flats in here, you've all got to pay £6,000 each. Now,
happy days, yeah.
If you want to, you can, and you're thinking to yourself, and you especially being in the trade, you're thinking to yourself, there's no bloody way I'm paying that because the roof's not worth 60 grand, but you've got to pay it. Then you get one leaseholder within that block who says, I haven't got £6,000. So therefore, the roof repair doesn't go ahead. The roof desperately needs to be done. The roof starts leaking. So we've now got a case of we can't sell our flats, we can't rent them because the property is rapidly becoming uninhabitable. Where is the freeholder? Oh, the freeholder's over in Spain, or the freeholder's no longer with us. The freeholder's disappeared. What do we do now? This is a major, major headache. Again, you think to yourself, I really wish I'd flipped that flat and bought a freehold property. I'm not negative. My glass is always full. It's always overflowing, but I just want to point the pitfalls out to people whilst we're actually on here. And just to mention one more thing, it's just come to my brain now, Sean, is that one of my guys mentioned your name. You've done work in his own personal house, and he said the standard was exceptional. So to anyone listening to this, I've had
Thank you.
a referral from somebody who I know and trust who's working with me, who knows Sean, and he said the work was absolutely exceptional. So there we go.
Thank you.
It's amazing. It's amazing the subbies you can get in it, Sean. Sorry, mate. Sorry.
Excellent. Have we got any more questions, or does Jamie want to do a bit?
No, just before we moved on from that, has anyone got any flats that sort of resonates with anyone?
Yeah, can I ask you something, Jamie?
Yeah, fire away.
Or Ben, what happened? Actually, the property I just bought literally last week. So it's got a attic conversion on, yeah. I think about 10, 12 years ago.
Okay.
Roof ladder. There's no proper staircase.
Okay, so that would have been done as a storage room and not, even though it's outside building regs. So it's a storage room and it will stay as a storage room because it wouldn't have permission.
To be honest with you, that, yeah. Sorry?
With attic conversions, it's a huge bone of contention, right? Generally, because of the building regulations required for attic conversions, and again, sorry to pick on you guys, I don't know whether Sean and Gary agree with me, to get an attic to building regulations standard as a bedroom, certainly in Newport, doesn't work. You're not going to get a return on the money, on the investment which you actually put into it. If you go to West London, where I used to sell houses, every single house has an attic conversion because the houses there are not 150,000, they are 1.5 million. So therefore, to spend 60, 70,000 pounds doing a really nice attic conversion pays massive dividends. You pay 30, 40 grand here to add an extra bedroom to a 150,000 pound house. It's not going to become worth 190,000 pounds. The only caveat to this is you've got to have the proof. So over the years, the building regulations have become more and more and more stringent. So, for example, if your attic was converted with a proper staircase in 1965, if it was done to building regulations that existed in 1965 for an attic bedroom, even though it doesn't comply with today's regulations, you can call it legally a bedroom. You need the documented evidence for that. Likewise, if it was done in 1985, again, the regulations were stricter than 65, not as strict as they are today. If you have no paperwork and no evidence, then obviously it's got to be to today's building regulation standards, which would involve having a local authority building inspector coming around and saying, well, actually, no, there's no fireboard, there's no fire door, there's no, all the different things that need to be in place. The windows aren't low enough for a fire. We all know the different things that need to be done. So attic conversions are a very big bone of contention. The general rule of thumb that I'd say, and I'm not an expert on building regulations, though, if it doesn't have a staircase to the attic, it is a boarded attic. It is a storage room, and you can't call it or use it for anything else unless you obviously pay the money and get it converted properly.
What happened, Ben? Actually, that guy, it is called as a storage, and that the roof ladder, and that's fine. But I also got a very good price as well. But the thing is, the attic is really done to a very high standard. So obviously, the building reg. So I'm thinking as it is in Bridget, but as it is a good deal with like 2-bedroom, but everything is done on that.
Yeah, I think a lot of this is, whatever it's labeled legally as, you've also got to take a moral call on it too. My kids are all grown up now, but I wouldn't be happy with my kids sleeping in the attic if it didn't have a proper staircase. I wouldn't be happy with that because and I know it's going to be a rare occurrence, but if a fire does occur or something like that, then obviously we are putting people's lives at risk.
That's the plan because it still counted as storage until. So what my plan is, obviously there is a large bedroom, got enough space, and you can put a staircase as well. So what I'm thinking now, already contacted private building reg, literally yesterday. So I'm considering between council or private. But So obviously to make it as a bedroom, there is no other option. We have to put a proper staircase. So I know a couple of the staircase company as well. So one builder came and they also took, obviously I said, let's get the building reg first. Then whatever they advise based on, then I'll see if it is what, like doing the staircase. If the rest is they're done to, like, the everything else is done. All you need to put, like, obviously once they put the floorboard and everything has been done, and everything else is the two Alex they already put it as well. So obviously they're all to building reg now. They see if not, I'll just keep it as a storage. So is it a good idea to get a building reg, and get that?
100%, because that way you know what you can label that room as correctly. Because in the UK, we've always worked on bedroom numbers, which is ridiculous. On the continent, America, they sell houses on square footage, which is the proper way to sell houses. How much space have you got inside that property? Doesn't matter whether it's properly utilized or not. In the UK, we would value a 5-bedroom house above a 3-bedroom house in the same street. But it could be the 3-bedroom house is actually bigger than the 5-bedroom house. We are coming around now because house sizes are appearing on floor plans and they're appearing on Rightmove. So what you've got to weigh up is, if you actually pay the money to have the work done to that attic to make it compliant with building regulations today, will it add the extra value? Now, I don't know about Bridgend, but I can tell you in Newport, the surrounding valley areas, it does not pay. I can categorically tell you that. As of today, it doesn't pay. Like I say, West London, £1.5 million houses, spend 60 grand, and you add another £250,000. That's why everyone gets it done. It's just a no-brainer. Here, spend 40 grand to add 20 grand doesn't make sense. Yes, people still get attic conversions done. They still get them done properly because they love the house. It's their own personal house. They love the area, and it works for them. But on the whole, if you're looking to flip, if you're looking at residential investment, if you're looking at genuine value adding, I would hedge my bets that it's not going to pay for you.
That's true. Yeah, that's I'm thinking as well, to get at least get the building reg, because everything else is on the attic. To be honest, done to a very good standard. It still is very looks. But I think the best idea is to get the building reg, and then they see what their advice is, and then obviously can do a cost-effective way. Is it make worth it? If not, obviously that's how the price I paid as well. So even it stand on good on even a 2-bedroom, and there's a chance as well in the downstairs. It's a huge living room, and there is like you can, if you want, you can make an extra bedroom and still keep a decent sized living area as well. There's another way, because maybe putting a lintel and making it like a door. There's another option we can actually make an extra bedroom if you want to. We can creating a door and create instead. So basically, that's my plan. First of all, I think about the attic one. So without doing anything, that's not my plan, because before doing anything, get a building reg and see what this says. And if you see like adding the staircase, and obviously, and if they see rest of the high up to standard, if not, obviously keep it as a storage, and thinking about either bedroom or maybe could add another bedroom in the downstairs.
Yeah, I mean, what you've got to do, is basically there's 2 simple things. Well, 3 things. Building regulations, reputable contractor who can follow the building regulations, and then somebody to value the property before you do the work, before you pay for it, to say to you, is this exercise that's going to cost you 30, 40, 50,000 pounds going to give you a return? Because if you spend 30,000 pounds and it adds 30,000 pounds worth of value, don't bother. It's hassle, it's stress. You don't need it. If you spend 30,000 pounds, that's going to return you 40, 45,000 pounds, then it's worth it. But you've got to value your time, your effort against those things. For me to answer it generically on here, I feel a little bit like when I was watching the news earlier, and I do really feel for these poor guys that are trapped in this submarine. But some questions like that, I feel like the US Coast Guard, when they're asking him, have you found it? Where is it? What are you doing to find it? Because it is so generic. I can't tell you what's going to happen with it, how it's going to work. You've got to do that own research yourself on that individual property in that individual street in that individual area, and just see A, what the costs are, and B, what the uplift in value would be. But as my advice, Bridgend is similar on value to Newport. It's probably not going to pay. Going a stage further, downstairs bedrooms, unless you've got a purpose-built, well-designed townhouse, I don't know whether everyone else agrees with me on this, perhaps I'm being harsh, downstairs bedrooms don't work. You walk into a house, and we have traditional designed houses, two-story houses, bedroom, bathroom upstairs, lounge, dining room, living room, perhaps all in one, however you do it, garage downstairs. If you say to somebody, right, this is a 5-bedroom house, and I'll say, well, actually, the lounge is small. Oh, no, the lounge isn't small. It's got a lounge diner because we've taken the dining room to become a bedroom. It's kind of like you'll waste a lot of time with people's expectations. That's all I'm saying. There are houses that work very well with downstairs bedrooms, but normally they're purpose-built townhouses. They're normally 3-story. You've got a downstairs bedroom, then you've got obviously your living room, your dining room, your kitchen on the first floor. Then you've got additional bedrooms on the second floor, and they're 3-story configuration like that. Traditional 2-story house with downstairs bedrooms, I don't think you are going to add value. I'm not being negative. I'm just saying what I personally feel, as to how people like to see houses configured, basically.
Yeah, thank you very much. I'll take this into account. I think I got a couple of friends on state agencies, so I can ask them
Ask them because they know the area. You see, the thing is there, Hassan, they know the area. So they're going to be able to say to you, right, if you put an attic bedroom, you're probably going to add £25,000 worth of value.
Yeah, that's right.
When your contractor comes back and says, look, to do this properly, it's going to cost you 30 grand, you know that it's a non-starter. And that's what you've got to look at, just look at that very, very, very carefully. Because like I said, I can't comment on streets, houses. If you told me it was a street in Newport, I'd be able to tell you how much I think it is going to cost to do the conversion. And B, my synopsis would be it's not worth it.
That's true.
Thank you. Thank you very much indeed. Anyone else got any questions at this point in time?
Another
thing holding
his
head still, or he's frozen.
I think for Jamie, maybe that one. What in terms of obviously, the lender now changing their way of thinking, how they seeing the deal now. So obviously, Jamie say obviously that I bought with my own finance. So in the future, that's obviously after doing the renovation, that my plan is to keep that one, and obviously refinancing. So even with Arctic or without Arctic, what the lender will see, what they will be looking for.
Without sounding rude, Naveed, I think that the time that you're looking, because you're going to go through a process of trying to get building regs on the attic, and I can tell you now, they will tell you, well, we don't know what's been done beyond this boarding, so you're going to have to rip out all this boarding to see what's been done. You're not going to want to do that, because then they're going to tell you, yeah, this hasn't been done compliantly and you need to start afresh. Time you go down that rabbit hole and come back from it, you could be 3 months down the line, and lending at the moment and criteria is changing like hourly. And I genuinely mean that. As I say, I've got an underwriter still messaging me now on cases to get through. You can do day one remortgage, so we can do a remortgage on day one with market valuation, not with all lenders as of today. You don't have to wait for 6 months. If you want the whole of market review on it, you'd have to wait 6 months as it is currently. By the time you go down your rabbit hole and come back, I don't know what the market's going to be. Does that make sense? Has everyone left me? Is it just me?
I think he's gone.
Sorry.
All right. I was going to say, you didn't like what Jamie said there, did you?
No. What I'm saying, no, I like it. So the day one, day one, I know not many lender will do, but some of the lender you said they can do for the normal valuation, is it? Not the
So they go against market valuation from day one.
That's great, isn't it?
So it really does depend. As long as we can justify if there's any uplift, as well, it can help. It's all about evidencing on that scenario. and knowing the right lender. It can be done day one. It can be.
Oh, that's great. My fast frame is normally whatever I take, to be honest with you, I try to do the work very high standard. So soon as I think, so it's better to start process pretty soon, and because that renovation not without that, I think obviously it's not gonna take that long because I'm changing the bathroom and obviously house renovating, the some of the flooring and painting, decorating mainly. So this is not a big job. So obviously by that time they all get accepted, they send the value and job could be completed, isn't it?
Yeah. So the valuer can be instructed now.
Yeah.
With they're doing day one valuations. So as soon as the application goes in, they'll instruct the valuation. And don't get me wrong, there's a little bit of leeway. You can push them back in terms of, I can't get access to the property this way. But lenders at the moment, they want funds out because as soon as an application's in, those funds are reserved. And if we're not pushing forward, they'll cancel the application. So I wouldn't submit an application until we're probably maybe 95% of the project done. Ben would disagree. Ben would want 100% of the project done because you can package it and present it better to the surveyor, which is the correct advice in reality. But it all depends on your cash flow and time flow. I wouldn't start until it was 95% done, personally.
Yeah. I mean, just going back on that, I mean, obviously Jamie is the finance expert. Jamie is the person I turn to for any finance, mortgage, commercial finance, bridging loan, development finance. He's the person I turn to ask for advice. What I know about a lot is because my father's a chartered surveyor and valuer. Still at the age of 76, he does a few days' work per week. And what I tend to look towards is what valuers look for, what they want to see, and what you need to do to help them achieve what you need to achieve. And one of the major things is it's all very well to have a property that's almost finished, but a valuer has to report what they see today. So even if, for example, the bathroom isn't fitted, but there's a new bath with shrink wrap on it, there's a brand new toilet, there's all the tiles, the grate, the adhesive, there's everything there, they are going to say that property does not have a bathroom. So therefore, the value is done without a bathroom. Because technically, you could do that, and then you could put all that stuff into your van after they've gone and disappear. So they've got to see the property finished. And I can't stress this enough. If you want to maximize on revaluations, and indeed if you're doing flips, it's just as important when you're obviously maximizing on the valuation for the onward purchase. You need to follow certain steps. I've got some examples of what I do. I've got a little video that I prepared because I do a lot of business with a South African training company who invests very heavily in South Wales. So I've done a little video for them. So if you want to see the video, just drop me a line. I'll send you a link to the video. And it explains what I do on revaluation, how I present the property to the valuer, what I give the valuer, and what I say to them. And that's really important, is because if you watch this video, you'll see the huge variation. I got proof of how it actually does work. A lot of people doubt what I say, but I've got proof that it does actually work. So, like I said, if you want to see that, let me know.
Thanks, Ben. I'll do it. Yeah, thank you. I really appreciate that.
No problem, no problem. Anyone else? Any questions?
Could I throw my hat in the ring?
You can, Dale.
Financing of my first proper property deal. Setting up a limited company, as I said at the moment. How would I go about that? Obviously, with mortgages and my own personal house, they look into my previous finances, my incomings, my outgoings. What are the differences with businesses?
I think that's Jamie.
First of all, I'll refer to it as an SPV, which is a special purpose vehicle. That's what the company is. And my ears prick up when people say it to me, first of all, Dale, about setting up a limited company. And the reason for that is they watch on YouTube and they hear in groups that limited company is the way to go because of Section 24. From memory, I'm very tired, guys, so do forgive me if I'm off on the sections. I'm pretty sure, Ben, it is Section 24. I'm pretty sure in it. I'm 99% sure it's Section 24. But so people jump onto this buzzword, but actually, from a point of view, first of all, is interest rates are higher in it. you do get to claim the tax relief, so it can work out better. In a short term, you do have then increased accountancy costs as well, so sort of balance itself out. Then you've also got, and I'm giving you the negatives, because I want you to understand the negatives a little bit first. Then you've also got, are the government actually going to turn around and go, hang on a second, all these landlords that were in their personal name, they shifted them across the business name, we're losing out this revenue. Let's close that loophole next. Are they going to do that? Probably, in my opinion. Do you need to go down the SPV route? Could you do it under a partnership? So a true partnership would get the same relief as if it was a limited company. So those that understand, you need to get proper advice when doing it. And don't get me wrong, most of the time, if you're a smaller landlord and you're just looking for a better return on the money you have and you don't want to go as aggressive, a limited company is the right reason, is the right choice. Okay. But without getting, so first of all, don't just go get proper advice. I hear there's some really good guys called Notebook Money. Reach out to them. The second side of it is how lenders assess the limited company is the same if it was in your personal name. So buy-to-lets are all based on a rental income, not your personal income. And why you've got a personal guarantee, so there are increased legal costs as well, actually. It's no different if you do it in your personal name. It just reduces some of the lenders, like I'll use BM Solutions, which are the Halifax buy-to-let arm. They don't do SPVs currently, but they have got a product to release in the market, and they probably have a 20% share in the standard buy-to-let market. They're sort of big lender like the Mortgage Works, they too. But really, as a whole, it doesn't really change your aspects of getting a mortgage. Does that sort of make sense, Dale?
Yeah, kind of. So just give a bit of background. I'm close to a higher tax rate, so that's the reason why I'm looking at sort of being more tax efficient with a business as opposed to in my own personal name. But then if I'm looking to do the sort of flip route, a rental mortgage wouldn't be suitable anyway. So what would that be, a bridging loan then?
So this is the little one. So say hello, Abram, quickly. It depends. I don't know your circumstances, and to get full and holistic advice, I think is proper. I'll talk indicative because I'm not giving advice. Ben's recorded this, so this is not advice because we're an advice-based service. I don't know if you're married, if you've got a partner, those situations, if you're doing it on that way, you can do it as a partnership and not an SPV. You can actually do it like scenarios. I can't remember the form from HMRC right now, as I am extremely tired. I don't know if I mentioned that a million times. You can do it where you can both own a property, but if your partner doesn't have an income, she takes all the income, which is under her threshold then. So, because everyone gets a personal allowance. So there are a number of things to do. As I say, in most cases, depending on your strategy, an SPV could be the right solution, but without having the proper conversation and speaking to a tax expert, really, it's understand. Like an SPV could be really good. I'll just put something else into the mix. It's understanding everything is if you think actually longevity, I'm getting into property, which most people do for two reasons, or three reasons, is they want to make money. It's the first reason everyone gets in property. Second reason is they're thinking about their retirement plans. So we've heard Gary and Sean say about getting up the tools, about retirement plans. Or the third reason is legacy planning. They're thinking of their children. So effectively, depending on where you want to go, if it's retirement plans, you want some in your personal name, just because of capital gains allowance and shifting or selling as you're older later on. But legacy planning would be SPV because you can later on have children shareholders and get a little bit more complex and a little bit more tax beneficial. So understanding what you need to do actually gives you the better advice. It may, like what I say to people all the time is the cheapest deal is not the best deal. If you're looking for, there is, I'll elaborate a little bit more on this. And this is a very arrogant statement, so please do not take the wrong way for anyone in this group. You've all met me apart from Ian, I think, and yourself, Dale. Oh, Sean, you haven't met me. You met me virtually. I guess everyone's met me virtually tonight. We run South Wales Property Investments. There's lots of other buy-to-let groups out there, and lots of other buy-to-let groups do not let any other broker into their group because they're run by mortgage brokers. And what they want to do is they want to keep you in their little ponds and effectively you become their clients. I co-run the group with Ben. I probably do more in the group technology-wise in the back end than Ben does. I say probably, it's 100% more than Ben. That's not true, actually, Ben. Ben set up this, so I'm lying. Is if you're looking for the cheapest rate, if you're looking for headline rates, speak to another broker in the group. They're in the group because there are people out there that think that's the right advice. But we put ourselves a little bit more in terms of structure and things. So I would say you need to speak to somebody that understands your objectives, your needs, and actually give proper holistic advice. That doesn't mean it costs the world, neither. To get advice, it could save you tens of thousands of pounds.
Okay.
It's quite funny, actually. A lot of people ask me the question. How many people have heard of the phrase "tired landlords"?
Tired Jamie French, I've heard of.
Yeah.
Well, I'm just going to say, right, when the next
Yeah.
person that asks me, right, where to find tired landlords, I'm going to say, come on the Tuesday night webinar. You'll see Jamie. Best place to find tired landlords. Hey, guys, thank you so much. Has anyone got any more questions before we call it an evening? I know you've all got busy lives and food to eat and beer to drink.
I've just got one. Just going back to what you were saying, Jamie, about getting specialist tax advice. I actually went to see my accountant today, and she was pushing me down the route of setting up a limited company. And my thoughts were, firstly, I want to speak to somebody who's a property specialist. Do you have any recommendations?
So I have.
And whether that's the right vehicle for me, based on what you've just talked about.
So there's two questions there. The first question is, I actually work with two accountants, so I've got they cross over because I bounce ideas off the one to the other and verify information. So I've got an accountant based down in Essex. I've got an accountant based in Newport. The one in Newport is very boring, very rigid, not very creative in any way, shape, or form. They actually manage my trading business because we're heavily regulated as financial services. So I give them everything in trading. The ones down in Essex, they're very creative. And when I mean very, very creative, I mean like these clients are very wealthy clients and they understand money. They're not cheap, but they save me more money. But what I'll do is I'll have him in for my property and I'll ask him stuff to do with my trading business. Which then I will sort of run that back. Why are we not doing this? Why are we not doing this? And then I call him the boring accountant, which is maybe a bit unfair, but I'll ask him like stuff so I can play them off each other.
Yeah.
The thing that I've got is, and I think Ben's got the same issue, is both of my accountants are good. I wouldn't not use them. Don't get me wrong, one's boring, one's exciting, one then, etc. Not taking on any more clients. They do not have to. They literally their books are closed. Like they've got a waiting list to get on their books. I've only got the one in Essex because a good friend of mine, James, who's actually funny enough, we went out for a meal by chance. I sat on a table. My mate James was presenting. I sat on the table with the accountant. Didn't notice he's accounting, and we've had a laugh and joke. And then he's at the end. We're going for food. He's like, this guy should come. He pulled over, was chatting, and then we come, and that's how I got in. It's just by chance, but his books are closed. But we are trying to work on a local accountancy firm that can give advice and we can work with. And again, I can, I don't want to say sense check their advice a little bit. And that doesn't mean every time someone speaks to their accountant, they ring me up because I get 200 messages a day. But where we can do webinars, get an accountant on, and this, that's the thing.
Yeah.
The second thing for your question is, yours is a little bit more complex in terms if we do the one that we're talking about with Sean Roper, that I would do in a limited company. And the only reason that because it's going to be connected to a trading business, not the purchase won't be, but you're going to rent it for a trading business that's associated with you, which means if you sell that trading business, you can still get a rental income and you can keep it nice and separate. So I would in that scenario. personally.
Okay, I'll work on it then.
Yeah. But good news is, sorry to interrupt, that does mean, you may have sent this to me already today. I was out the office to get my son's prawn soup this morning, which led to all day shopping pretty much. If I need that information from you, don't forget. I don't know if you sent it to me, but don't forget I need to me. Yeah.
Got it.
Yeah, great.
Yeah, okay. And one other thing, if you do have a limited company, I don't know this answer, VAT. Do you if you're buying and selling property, do you register for VAT? Is that or is that a stupid question?
No, it can be vatable, but not really. Vatable comes towards the commercial side of things on commercial properties, but not on the residential. But that gets a little bit more grey because you may end up with semi-commercial elements, etc. Yeah. So don't register. Always seek advice from an accountant. 1 second, sorry, guys.
Okay, thanks, mate.
Cheers. I'm going to hand you over to Ben for a second.
Brilliant stuff. Thank you, Jamie. And indeed, thanks to everyone who's come on this evening. Unless anyone's got any more questions, we will call it an evening. Yep. We will be back on Tuesday, but I won't be here myself for the next 2 Tuesdays because it just so happens I'm only going away for a week, but I'm traveling on both the Tuesdays. So I'm going to do a video with some thoughts on the market and where we're going with it, etc. And obviously, Jamie will be able to play the short presentation over the next 2 weeks. I'm then going to give him 2 weeks off, and you'd have to deal with me. So I do apologise for that. But tell everyone you know in property about us. Tell everybody about what we do. Invite everybody to the webinar. The more, the merrier. It'd be lovely to have more people in our community on a Tuesday evening, and we can go from there.
Yes, thank you, Ben. Can I just fire one question for Jamie, please?
Yeah, sure. Please do.
Yeah, just one thing. Sorry, Jamie. In terms of residential property, I got a holding strategy in place. Yeah, so I'm just thinking, like, is there? I know very, very, very limited, but obviously, if holding company own a SPB, I know that could be. Is there many lender who like that of strategy, especially on the residential side?
Yes. So company layering is we do that a lot, and that's where it comes back to understanding objectives and portfolios. If you want a rate chaser, a headline, someone's going to give you headline rates, you're not going to get somebody who understands that. But it's completely plausible, and that's where it comes down to that legacy planning. You can have a holding company, subsidiary, a trading company connected to intercompany loans, to really, really complex stuff. It's not complex when you know what you're doing, but yeah, that is completely plausible.
Because some of the residential lender, obviously, maybe most of a lot of them, they don't like holding strategy, but some of the creative lender they do like it.
So you're not, when you start getting down the route. So again, this goes back to the rates.
Yeah.
When you start looking at tax planning, which is where you get into your layering company and legacy planning, IHT planning, is you're not looking for the cheapest rate because you're looking for a lender that understands the structure, because that structure is more beneficial for you to move money around and get creative. You're not going to end up with your Barclays, your Santanders, your NatWest of this world. I'll give an example. We as a firm, we constantly, and I mean this constantly, we get people go, oh, I've used such and such broker, they recommended this lender, and the lender's declined it. We look at it, we take a little bit longer, we get more information, we go back to the same lender, and we get that offered. I get like Aldermore isn't a lender who we are what's called a platinum brokerage, so we have a direct line to their senior underwriter. When I say senior, that's head of underwriting. Here's another little one. Sorry, I think you're close. You're lucky. That will do a deal. Their words were, we'll do a deal if it makes sense. So what that basically means is I'll give an example. We've got someone today who's called me today who said that they're buying a property in London. The property, I think, was like 190 grand for this house, but was it 100? I think it was 190 from memory. The house on the open market is probably worth 800 grand, but the reason it's 190 grand is like 20 years left on the lease. To get to extend the lease, it's going to be like something like 250 grand. So the person's got to put 400 or 500 grand into the deal, but then it's going to be worth 700,000. They're happy to do that deal, and they're paid for the lease extension all on completion. They'll do that because the deal makes sense.
That's
it's
right.
It's understanding the deal.
Yeah, that's right. Yeah, all depend on what is your relationships, and obviously not many broker or lender they know this kind of stuff, and they don't like, but some of them they're creative. They obviously understand the structure and.
So the way that we would say it, as long as you're not declared currently bankrupt, so you can't lend legally, and as long as it's for a legal purpose, and as long as there's enough equity in a deal, there's a lender out there.
That's right. Great. Thank you, Jamie.
No worries.
Awesome. Thanks, guys. Anyone else got any questions? No? I think we're done for the evening. Guys, my sincere thanks to you all for joining us. Like I say, let's grow the community. Please invite people, give them the link. Let's get more and more people on. As I say, I won't be here for the next 2 presentations.
Just stop doing his tracks there. Naveed's on his mobile phone, out and about. I'm sure you're taking your mobile with you. Hashtag just saying.
Well, it just so happens, and I'm quite willing to share the flight information with you and show you my tickets, that on each 7 p.m. session, I will be in the air. Unfortunately, I'm not going on Qatar, Etihad or Emirates. So unfortunately, I'm going on Jet 2, which don't offer the Wi-Fi package. Before you start, I'm not going on holiday. I'm going to evaluate the serviced accommodation offerings in Crete. That's what I'm doing, okay?
Oh, really?
Yeah.
Oh, great. Thank you. And thank you very much, both of you. I really appreciate that because.
Oh, I think my signal now.
Thank you very much, Jamie and Ben, and you both of you really nice welcoming and also doing great for the community. I really appreciate that.
Thank you.
If you could just pop that in the group for me, I appreciate that.
I'm just glad he's back home safe after the worry of him driving. Just got one more question for you. Whoa, yes.
I just concentrating on audio while I was driving. But,
good man. Excellent, guys. Thank you so much. And indeed, thank you to everyone for joining us. Thank you, Jamie, for your really good inputs. And indeed, look forward to seeing you all. Well,
thank you, Ben.
Over the next few weeks. Any questions? You've got our contact details. Get them down. If you want to see the video about the refinance, let us know. I'll get it over to you.
Yeah, I think I'll do that. Thank you, Ben. Thank you very much.
Thank you both. Cheers.
Thanks, both. Cheers. Bye.
Thanks all.
Have a lovely evening.